Hey there, good afternoon. It is Monday, October 28th, and welcome to your mortgage market update. I am Sean Richard with Gateway Mortgage Group. Hope you're having an incredible day and that your weekend went well. Coming to you this afternoon after we've seen a little bit of a wild ride over the last couple of weeks in mortgage bonds and ultimately mortgage rates. So wanted to give you a little bit of information about what to expect as we move forward. So the real change that we've seen is as of this week, as of last week, I should say, as of Monday, mortgage bonds broke below their 100-day moving average. Now that 100-day moving average has been a pretty sturdy floor of support for quite some time, and it's just recently, obviously, that we broke below it. So now, fully expecting that floor of support to now become a ceiling of resistance. I think it's going to be difficult for us to break back above that without any major news that's going to be impacting that. Now, speaking of major news, is we've got a lot of data and information coming out this week that could influence the market. So it's going to be important to watch all the details that come out. Starting with Wednesday, we've got the ADP payroll report. So we'll see what ADP thinks that the job creations are going to be. We also have the Fed rate decision coming up on Wednesday as well. They've got their meeting Tuesday and Wednesday. We've got their Wednesday afternoon. We've got their rate decision. It's, in all likelihood, we're expecting another Fed funds rate cut by 0.25%. Now, keep in mind that this doesn't mean that rates are coming down. It really has less to do with the direction of the rates. The rate itself, and more to do with the reason that the Fed changes the rate. So this rate cut, if it's for inflationary reasons, then we very well could see that have a negative impact on mortgage bonds, which ultimately means mortgage rates will continue to climb, which is exactly what we've seen over the last couple of weeks now. So we'll keep an eye on that for Wednesday. On Thursday, we get the Fed's favorite indication of inflation, which is PCE, Personal Consumption Expenditure. Say that 10 times fast. So that's coming out on Thursday. We'll see what inflationary data that brings. And then on Friday, we get the big Board of Labor and Statistics jobs report looking at job creations for the month of September. Now, the consensus is that we're going to see 105,000 job creations for the month of September. Now, that's down quite a bit. Last month was 136,000. Obviously, earlier in the year over the summer, we were up over 200,000. So part of the decrease is, of course, due to just fluctuations in economic cycles, but part of it is also potentially due to a slowdown in the economy. So we'll have to keep an eye on that. Now, 105,000 job creations could mean that it's a low number and it could be easy to beat. However, it also could mean that it's just truly an indication of slowdown, and it's not going to be so easy to beat. So we'll have to watch out for Friday. All of those data points, Wednesday, Thursday, and Friday, could yield movement in the markets, the mortgage bond market, the 10-year Treasury. Obviously, stock market is killing it, rivaling best levels of all time. So if you've got money invested in the market, doing awesome. If you are waiting to buy a home until the rates come down further, may not want to wait so much longer as we're seeing rates continue to tick up here over the last couple weeks, as I mentioned. Don't forget to check out the charts of the 10-year Treasury and the mortgage bonds above in the Twitter link, and then feel free to leave comments or questions below. Hope you have an incredible rest of your week, and I will catch up with you next week. Take care.